Welcome to this week's Market Talk. I'm Amber Lancaster, joined today by Ian Dyer. Paul Mampilly is on assignment. Each week we look forward to sharing our viewpoints with you, our readers, and giving you insight into what's on our radar. Today's outlook is for the week of February 4th, 2019. I'll begin by sharing with you what I'm watching, and then we'll hear from Ian. The jobs report released this past Friday crushed estimates. Economists were expecting a non-farm payroll print of 165,000, but non-farm payrolls clocked in at a tremendous 304,000. The January release is the 100th straight month of job creation, the longest positive run on record. This report continues to show strength in the U.S. employment sector. Also beating economists' estimates for the January Institute of Supply Management, or ISM, manufacturing report. The indexer is 56.6, surpassing the survey of 54. It saw a strong uptick in demand and a waning in prices paid. This proposes that profit margins and production are holding steady so far for the U.S. economy. All in all, both jobs and ISM manufacturing reports show that the U.S. economy is in good shape and should continue to do well in the near future. For this week, we can expect to see the ISM non-manufacturing index number on Tuesday at 10 a.m. Eastern Standard Time, and economists are expecting a print of 57 for this index. On Wednesday, February 6th, we will see and we have a read for the MBA mortgage applications. And on Thursday, February 7th, initial jobless claim numbers will be released for the period ending February 2nd. The survey is expected to have 223,000 jobless claims versus 253,000 in the prior reading. Per Bloomberg News, at an event over the weekend, Minneapolis Federal President Neil Kashkari stated that Fed Chairman Jerome Powell is coming around to the view to wait until wages and inflation rise before raising interest rates again, and that the Fed's latest pause will help keep a fundamentally healthy economy on track. He also said there are more people out there who want to work. So let's let the economy continue to strengthen, and if we see signs, then wages pick up, inflation picks up, and we can always tap the brakes. So in all, he feels that let's just not tap the brakes prematurely. Lastly, our disruptification index continued to do well this year. As of Friday's February 1st close, it's up nearly 18% versus 7% on the Dow and 8% on the S&P 500. This is a beat of 2-to-1 year-to-date. Over the past week or so, we've received questions from listeners wanting more details on what is the Disruptification Index, and what are its components, and how is it calculated. So to start off, I'd like to talk about the word disruptification. Disruptification is not yet a word found in a dictionary, so until it's added, here's its definition in Paul's own words. Disruptification means that nearly every field in the business world is in the middle of a massive transformational change. These disruptions are upending the old ways of doing things. And in the process of doing that, they're going to wipe out the businesses that depend on these old practices. That means if you're an investor open to investing in change, this is a time of great opportunity. And for other investors who keep insisting on the old ways, it's a time of incredible peril. So in this index, we focus on new world stocks because some of the tried and true stocks have become risky over recent years. Currently, this index consists of more than 100 stocks currently recommended across 4 services. The 4 services are as follows. The first is Paul's Profits Unlimited monthly newsletter. This newsletter helps investors get access to Paul's revolutionary way of investing acquired over his more than 25-year career in financial markets. It's a system that's accessible to everyone, regardless of how much money you have or your investment acumen or your risk tolerance. Profits Unlimited helps everyday investors get in on the ground floor in innovative companies that are just about to see explosive growth. And these are the types of lucrative companies that most investors don't recognize until it's far too late. The second service is the $10 million portfolio, which is traded by Ian and Paul. This premium traded service aims to capture gains on securities traded both domestically and internationally, and strives to find the best trades neglected by mainstream investors. The third, Paul's True Momentum Premium Trading Service, as the name suggests, aims to find investors, helps them spot stocks that are on the move, that are about to deliver quick and massive growth. And lastly, the fourth is Paul's Extreme Fortunes Premium Trading Service. With this service, he does his utmost in identifying trading opportunities in stocks that are rock solid and primed to rally. The 100-plus stocks across these four services in the Disruptification Index are equal weighted, meaning that the same weights are given to each stock. The size of the stock's position multiplied by its current price will equal its current value. So each security in the Disruptification Index has the same value. The smallest companies are given equal weight to the largest companies. And as the services issues buy and sell recommendations, those securities are subsequently dropped or added to the index. So this is a living, active index that's updated in real time and monitored daily. So we are so excited to have this custom index, which helps gauge the performance of services for all of our services as a whole. And I look forward to helping monitor it and sharing with you, our listeners, how it's performing one week after the next. So that's it for me today. Ian, what are you watching?
Hey, Amber, thank you very much for that update. So some of the things that I want to dial in on for this week are, first, a review of some economic data that came out last week. And we saw the highest labor participation rate reported since September 2013 at about 62.3%. And this measures the people that are looking for jobs or already have jobs in the economy. So reading this, the highest in over 5 years, is a very good signal for the economy. And that's also connected to the jobs report that you mentioned. And in fact, the number of new jobs added in the past 2 months are now about 616,000 compared to the forecast of about 343,000. So job numbers have come in almost double what was expected, and that's a great sign, obviously, for the economy. And another very important piece of data that came out is the new home sales number for November, which was delayed a little bit because of the government shutdown, but this number was 16.9% growth month over month for new home sales. And that's the third highest monthly growth that we've seen since September 2014. So with the jobs and the home sales, which are two very big parts of the economy, it's looking very strong, and fundamentally things we believe are going to keep getting better in the future. And just to say a little bit about earnings, so far about 46% of companies in the S&P 500 have reported earnings, and 70% of those companies that have reported higher than expected profits, and 62% have reported higher than expected sales. So even though there was a recession kind of priced into the market already when we saw that 20% drop in the fourth quarter of last year, things have gone a lot better than expected, and these numbers continue to beat, and we believe that this is going to keep happening as well. And this week we have some really big earnings on the agenda. We have Google, SoftBank, and Toyota all reporting this week, which are industry leaders in their respective industries, and they also tie into disruptification. With Google, we have Waymo, which is a very big self-driving car company. It's one of the biggest in the world, so that really ties into one of the main themes of disruptification, which is autonomous vehicles. And SoftBank is a company that invests a lot of money. They've got a whole $100 billion fund dedicated to startup companies. So, for example, they're invested in huge companies like Uber, that we believe are going to go public this year or next year at the very latest. So with these earnings, we're going to see some very important data come out about disruptification companies and what's going on in the future. And as you mentioned, and as Paul always says, the new way of doing things replacing the old world. So this week is going to be really important for earnings and very important for disruptive trends across the market. And that's what I'm watching this week.
Thank you, Ian. Thank you so much for sharing your insights with us today. And thank you to our listeners for listening in. We look forward to meeting again with you next week at the same time. Until then, have a wonderful week, everyone. Take care.